Hey guys, Bob Hertzog, your real estate dad. Hey, had the Lizy Hoeffer in here today talking to me about two different extremes. Okay, we're talking about first-time homebuyers and the younger generation out there and the difficulty they're having in finding their first home. It's a lot harder for them than it was for us back when we were younger. Lizzie's got some really interesting ideas and some programs and thoughts on that, on how she can help those folks get into their first home. Then we jumped into the other extreme, which is the baby boomer senior market out there, and I was really shocked and amazed at how many programs are actually out there available right now for those of us that are getting up there in years, or especially if you're in my age group, our parents, okay, that are looking to either stay in the home that they're in and modify it to make it safe for them, or to downsize. Lots of really cool loan programs out there for people that are aging. So I think you'll get a ton out of this one. Hope you enjoy it. And as always, you know where to reach me if you need me. Have a great day. All right, good. Let's shift gears for a minute. I want to talk about more first-time homebuyers out there right now.
And
They're still getting their asses kicked.
and they will still get their butts kicked, unfortunately, even if rates come down. It makes it more affordable, but that cost of a house has gone up substantially.
Yeah, exactly. So, what is the biggest barrier for them right now? Would you say you're talking to these 20 somethings that are trying to buy their first home? You know, you hear about student loan, you hear about credit card debt, you hear about just flat out not being able to get a job. What are you seeing here?
Well, there's a couple things, right? It's monthly payment is the number one reason why people won't buy, and the number two thing is cash, right? So down payment plans. And then it's location. Okay. I will say that now that interest rates have been elevated for quite some time, location has actually not been one that is holding people back. I have more people buying in like Eloy and Elgin and like all these random
Yeah.
places.
Well, you know this. I just sold my first house, no, second house in my 26-year career in Maricopa. Okay. And it was a 22-year-old kid, the grandson of one of my clients. You did his loan for. 22 years old, bought his first house, and I thought of the old saying that you used to have when I was in the land business: you drive till you qualify. And that's kind of what some of these youngsters are doing, and a lot of them, like Case, I think works in the Southeast Valley. So I look at it and I go, gosh, Maricopa, that's so far away. Well, for him, it's only a 30-minute drive. I mean, people that live in Phoenix and work in the Southeast Valley right now are spending an hour or 45 minutes on the road just to get home, right? So it's all kind of relative.
But that's what happens with cities.
Yeah.
Like you couldn't like most people don't live in San Francisco. They live in the outlying areas. They don't live in Chicago. It's what happens, and Arizona could use another major city. So something will develop by, Casa Grande's looking very popular. But it is, I mean, something where people will have to drive to affordability.
Right.
And, when I first bought my first home, I mean, you sacrifice on things like that to make an investment.
Right.
And what I will say is that there still is quite a bit of opportunity if you can qualify. You still have a lot of grant programs, you still have down payment assistance. Those things sometimes are way difficult in other markets to get accepted. You can still do multi-generational housing, which is a big thing now in the last couple of years, right? Moving in with mom and dad, having somebody live in a casita. I mean, they now allow for ADU units to be put on properties in Phoenix. I mean, so you have to get creative. Like I bought my first home with my brother.
Right.
Like, and it was because I just couldn't afford to do so on my own, but I knew investing in real estate was important. I was single. I had not married, no children.
How old were you in buyer?
I was 22.
Were you?
Mhm.
That's because he's the youngest buyer I've ever represented, 22 years old. I was impressed. Nice kid too. I mean, you're a great kid.
I mean, I love my house. And I did it. It was also like, in the crazy days, right? About in 2006,
Oh yeah.
and I was like, oh my God, if I don't buy now, I'm never going to be able to buy.
Yeah.
And here's the thing about that, right? I bought probably a little bit before I was ready, and the market tanked.
Yeah.
And what's interesting about that is that I bought that condo for $168,000. It was worth at $1,33,000.
Jeez.
And that sounds crazy, right? That condo, like I looked it up in 2021, was 300 and something thousand dollars. And it's like you only lose when you sell in those conditions. So long as you can safely afford something, you will just hold on to it.
Yeah.
And real estate comes back. I mean, who'd have thought that literally whoever like bought some of the condos in there, $33,000. Okay. And then to find out that it was worth 340, I was like blown away. I was like,
Yeah. Well, and again, we go back to these social influencer types, right?
mhm.
And I was actually watching podcasts the other day where it was Dave Ramsey and two young guys that I think they had their own little show with Dave Ramsey or whatever. But one of the guys was really getting into it with Ramsey about, his feeling was, why don't I just rent? Why would I buy something right now if I can, and he starts showing these graphs of like in California where rent is actually, makes more sense than buying or whatever. And he said, you know, if I rent and I save that money and I put that money into the stock market and blah, blah, blah. And Ramsey just stopped him and he said, that might be a good solution for the next year or two or three. You're single, you don't have kids, you don't, all that. He said, but talk to me in 40 years. Keep doing that for 40 years and then talk to him. And then he kind of rattled off, the advantages and his experience with real estate and so on. It was interesting because I'm just dealing with this 22-year-old kid that he just got sick of. He basically in his mind said, why should I pay someone else's mortgage? And if you're paying $2,500 a month in rent, which try to find something for under $2,500 a month right now. It's crazy. You pay $2,500 a month in rent, in 3 years, you pay 90 grand towards someone else's mortgage.
So
Crazy.
that argument about renting always, it like makes me so angry because people don't understand the actual math. And I don't live in California and I'm not in a high cost area, but we're in a moderately high cost area. And so, yes, you might be able to save $1,000 in the difference between what you would rent a property for and what you would buy it for. But the thing is, it's not comparable dollar for dollar. So let's say you took that $1,000 and you invested it in the stock market or you put it into a bond, right? That $1,000 will only derive income or appreciation based on the $1,000. And over time, you will have some savings, but it will never match the leveraged investment of a real estate property. So if you buy a $400,000 property, you put 5% down, in a year, let's say it appreciates 3%. Okay. That's not, oh my God, money. That's $12,000. But let's say it appreciates 5%, right? That's 100% return on your money. The other one's almost 100% return on your money. And let's say you were saving $1,000 in rent. Guess what? That just already paid your rent differential
Right.
and then some.
Yeah.
It's like people just do not understand the math.
Right.
Like, sure, is it easier? Can you have $1,000 to spend on other stuff? Yes. Right. And when people are young and want flexibility, sure, the flexibility is worth something, but it's not the same. It's not an investment. Like you lose when you don't own money, or when you don't own a property. Like 75 if that wasn't true, 75% of people's retirement wouldn't be in the equity in their homes.
Right. Right.
Like it just wouldn't be. And the fact is that people are buying homes later and later and later, and they will not have the funds that they need for retirement, which is what you are now seeing because you're helping a lot more seniors.
Right. Right. Exactly. Which is a good segue into seniors. Let's talk about our aging parents and my aging clients and friends are aging like I am. I've been doing this now for my 26th year. So 20 years ago, it's kind of like when you're in school and you come up through school and say, hey, Mrs. Smith said she had you as a student when you were, now I'm getting the kids of clients I've helped in the past and their friends and that sort of thing. So, but I'm having conversations, whether it be on the golf course or at lunch or just wherever, with people my age in their mid 50s to mid 60s, 70s. And everything's kind of shifted now towards they're like the meat in the sandwich, right? The sandwich generation where they've got parents now that they're starting to worry about, gosh, I got to take care of them. And then their son can still have kids living at home. Okay. Or they're still supporting them. Um, so, there's things coming up in conversation. What do we do? I mean, 75% of seniors uh, don't want to leave. They want to age in place.
They cannot afford to leave.
Well,
I
that,
mean, have you seen the cost of senior living? It is crazy.
yeah,
Like, I have a friend right now who is looking into adults living, and she's like, I don't even know how people afford this. She's like, it is cheaper for me to get in home care and pay my mom's mortgage than it is for me to put her in a.
that's right. That's right. I mean, I've looked at it. It's 10, 12, $15,000 a month. Okay, that's average. It goes. You can try to get something cheaper than that, but that's what folks are looking at, and they don't have that kind of money, obviously, like you're saying. So they want to stay in their home as long as they can. Uh, but in order to do so, they're going to have to probably, you're either going to have to move or modify, is what the sun comes down to. So if they're going to stay there, they got to modify their home and make it safer, right? That's the old, what do you call it? The railars, the railings, anywhere there's steps, ramps, widening hallways for walkers and wheelchairs and all that kind of stuff. 1 in 4 seniors, the 1 in 4 people over the age of 65 fall in their home every year now. 1 out of every 4. Most of them are in the bathroom. Okay. But, it's, we're getting to this time now where, and I'm actually having lunch tomorrow with a gal at, just to learn more about this so that I can help out my folks when they call or have questions about this. I didn't even know they had these people. They're called placement specialists, and they actually go out with elderly people and their families, their kids, adult kids, and what they show them. They interview them and find out what their needs are. Much like a real estate agent, they go out and show them options of different care homes based on their experience in doing this and knowing all the different homes. They take you around from place to place and save you a ton of time and money. It costs you nothing because these care homes pay a commission to these placement people. Really cool thing. So going to lunch with this gal tomorrow just to learn more about that. But the one thing she says, yes, 75% of people do not want to leave. And then the majority of them that do leave their own home go live in with the adult kids, right? And
Well, there's a lot of people that downsize into much smaller property in communities. There's a lot of 55 plus communities that are more attractive in smaller places.
yeah, I just yesterday, just for the heck of it, I pulled up. I wanted to see how many patio homes and townhomes they're within a 5 square mile radius of Highland Peak, center of town. Under 600,000, there's 115 patio homes and townhomes, which are, in my mind, somewhere that people would look to downsize. Okay, unless they want to get into the communities where there's golf, tennis, things to do, that sort. I'm 55 plus, like you said. So there are definitely options out there. My question for you today is, what are the mortgage or financing options? Because I mean, I think of like a 75-year-old person, maybe in a lot of cases, 75, 80-year-old widow uh, woman, right? And because usually we kick off a lot earlier than you guys do. I mean, someone that has that job, she doesn't have the income or whatever. What are the options out there? We know about reverse mortgage and all that kind of stuff, but what are you seeing?
I mean, it's just like any way to qualify for mortgage. Every situation is slightly different. Um, I do help quite a few, seniors with either a bridge loan option, which is typically where they take the equity from the property that they're going to be vacating to use as a down payment on their future property. They still qualify for a first mortgage, but it's like I've got $400,000 in equity here. I'm gonna take a $200,000 loan out here so I can make it affordable. Okay. And I borrow that money and I use it for this down payment. So that's what a bridge is. There's a reverse mortgage, and those are really for people that are on limited incomes. And so it basically either eliminates a mortgage payment or gives you a small distribution. And so a reverse mortgage means every single month you owe more and more versus the opposite.
Right.
And that option I think is really interesting, especially in this climate right now where we have a lot of people aging in place who just really want to increase their cash flow. And a lot of people have not really liked the product in the past, primarily because you lose equity every month.
Right.
And heirs are typically the ones that get upset.
Yeah.
But it is a really great option
Right.
for anybody that needs the cash flow. And especially because, as children, we are fronting the cost oftentimes for that care.
Right.
And I'm also seeing multi-generational housing. So parents buying with their kids. And a lot of people don't realize that they have more qualifying income than they think. They have their social security, their annuities, their IRAs. We can take a distribution from 401k. Sometimes these people have lots of assets, right? And there's asset depletion loans where we can take a calculation and divide it by a number of months, depending on, how much assets you have to use that as qualifying income. So there is quite a few options. I'm not really seeing that I'm getting a lot of seniors that just on Social Security that want to buy. Generally speaking, those people typically move in with family member.
Okay.
From my experience, I should no doubt out behind that.
Yeah. Yeah.
But I would say that the number one product typically is a bridge. And I do those often. I mean, like last month we helped four widows actually, downsize.
What is the I don't know, I'm gonna screw this up. Debt, not debt to income, but the equity. Like how much on a bridge loan typically, you know,
You can take out 70 to 80%
the loans of
of what the house is worth.
got the one you're in.
Yes.
Yeah. So if you got
Less whatever you own.
right, so if you got 500,000 in equity in your house, you get an appraisal. It's worth $1 million and you owe 500,000. They can borrow 70% of that 500 to go buy another home.
So they could get out approximately 700,000 minus the 500. They get 200 to put down.
Yeah, and they're gonna have to pay a little bit more of an interest rate, but not
They pay interest on and depending on credit, right? I mean, it's I don't know, somewhere between 8 and 12%. Don't quote me. That's where I go. Depending, and they're paying that on the 200,000. That interest, it gets tacked on to the balance of the loan, and typically they have 4 months to sell their home and pay it off.
oh, so they don't have to start making payments on it right
Well,
away.
there's a lot of options. Really good. Lending has become a whole lot more flexible for people.
Okay.
Um, Especially because the climate has with high interest rates and you only like with interest rates being so low, you didn't really have a market for outside competing banks to come up with all kinds of new products.
Mhm.
But now our non-QM products are within range
Yeah.
of what a conforming rate is, and lending is like really opened up. Yeah, bank saving loans, profit and loss loans, asset depletion loans, DCSR loans, which is like where the debt, like you're getting income on a property so long as it covers the full mortgage payment.
Yeah.
Like, you can get that loan done. I mean, it's really impressive what can be done nowadays.
Are you seeing parents uh and their adult children co-signing together?
All the time.
Okay.
That's generational housing. So, yeah, all the time.
Generational housing.
Yep. So you see where they're buying, like, a six-bedroom house, which is pretty large, or a five-bedroom.
Oh, it's moving in together.
They're all moving in together.
What about if mom, you want to just move her closer to you in a patio home into your neighborhood so you can keep an eye on things? Can you, as an adult caregiver child, co-sign with mom to get the loan on that?
You can actually finance it for her. So it can be called family opportunity. So you get a family opportunity loan to purchase, like, a primary residence, a home for your aging parent.
Wow.
It used to be the opposite. It actually used to be you could do that for your children.
Right.
Now your child has to be on your loan, but your parent does not.
So
Well, we
if
got
you're the adult child, you're looking at it going, mom lives with me or I co-sign on a loan and she doesn't have to live in our house with us, right? And
but you're not even co-signing but yes, you're weighing the
yeah.
options, but now you're just financing it in.
Right.
And what the benefit, obviously, I mean, and this is substantially like, you get the benefit of having them in close to you in affordable housing that you can keep.
Right.
But then when you retain that property and maybe they're no longer occupying it, it's an investment with primary rates
Yeah. Yeah. Very
with minimal down, like 5%.
so glad that we talked today. And I was going to make this one long podcast, but I think I'm going to cut it into two because they're really two different subjects. And I think the second part that we talked about today, I feel like I'm pretty educated on what's going out there in this world when it comes to real estate, but I had no idea there were this many options for seniors. It's things have changed a lot, and that's good because there's, I mean, just about everyone I know that have parents that are aging, and they either want to just age in place. They usually do want to they want to have their own life stuff. They don't want to move in with their kids and burden them, right?
Or they just want their independence. I mean,
And they still want their independence. Yeah, exactly. And wow, very, very interesting. I'm glad we talked about that today. All right. Well, I think we should just wrap things up with that. The senior market is something we've got to start really paying attention to. My clients are asking me more and more about it, and it is our job to provide resources for these people like we've done for the first 20 years of our career. That's always been something I've hung my hat on is my people can call me for anything house related. So I want to really get bone up on my education here on this demographic because, the boomers are getting there to where they need to make a change. So cool. Thank you. Thanks for taking the time.
of course, appreciate you having me.
We'll see you back in a couple months.